Today's Thursday, February the 25th, and the McClellan oscillator has not been updated yet, but it was blood in the streets, as you can see here. This is a change over 1 week performance of the stocks that are tracked, American stocks that are tracked on FinViz, and today, where you really don't have too much in terms of good news. You've got Oracle, you've got T-Mobile, and 3M, and that's about it. Caterpillar and Deere was up because they raised their dividend by 19%. But the advancers to decliners were just a whopping 10 to 1. So the McClellan oscillator is certainly going to be approaching the oversold line. But I'd like you to take a look at this article down here, Simple versus Complex Oscillator Structures. We talked about it a year ago after he posted the explanation about complex and simple structures. Simple structures are simply ones that aren't messy. They're nice and clean. They just cut right through the neutral line and they go into one direction. They cut back through the neutral line in the other direction. But if they start to chop like this, these complex structures show that the bears are in charge. So if you look back here, we certainly had this one here. This is all below the neutral line. The bears were in charge and the market came down. This was simple. Nobody's in charge. It's just oscillating up and down. There's no complex structures in here at all. And what is the market doing? It's steadily moving up because really there's no one in charge. This is complex, but it goes back and forth over the neutral line. So it's just a series of simple structures. And then you have more complex structure here, which means the bears are in charge. And look at this. This foretold this drop right here, which really is quite a significant drop, as was this one here, and although this is really just a series of simple structures, but we still did see a pull down. Now this complex bullish structure with the bulls in charge, and up we go. But we don't see anything happening in the New York Stock Exchange composite index. It just looks like it keeps going up. And if the bulls are in charge, as they certainly appear to be when it gives us today's number and we still don't have it, then why aren't we seeing the drop in the market? There's the Dow. We're really not seeing a drop. There's the S&P. We're really not seeing a drop, but what is significant here is that we're seeing support at the 50 moving average like we did on Tuesday, and we had a bounce on Wednesday. Then we pulled back today to get another bounce on the 50. I'm not going to talk about any stocks today. I'm just going to talk about the overall market because that's really all we want to know. It's just there's no point now in looking at individual stocks. Here's a gap that we could go down to. If we lose the 50, we've got the 200, and there could be a pull down to the gap, which is at the 200 SMA right now. It may not be in the future, but if we look at that gap, you might even think that it's sort of been filled with this wick and that tail. So I'm tempted to take that out of there, and all of the other gaps this year have all been filled. So there are no gaps to worry about, just moving averages, the 50, the 200, and the 200 simple moving average. The 50 has been pretty reliable here. We came through it, but only for about a week. There were buyers on top of the 200 and up we went again. Same thing here. But here the 50 was in charge. Here the 50, which crossed the 200, that's a bullish signal, that was in charge. And here we had the 50 that was resistance. So the 50 has been support here, resistance here, resistance. So the 50 is really, really quite important. So keep an eye on that. We're bound to have a bit of a jump tomorrow to overcompensate or compensate for today's drop, but it doesn't mean that the worst is over yet. And to convince you on that, the volatility index really did take quite a jump today. It did pull down towards the end of the day on this 5-minute chart, but look at the 1 day where we really did have, a significant jump in the volatility index. So read that article about the McClellan oscillator, simple and complex. The bears seem to be in charge. There is no real reason for the market to pull back. COVID is looking like it's going to be under control by June to August. Doesn't mean everything's going to come back. and everybody's going to be dining out and flying, but it does mean that the economy is going to get a tremendous boost in the summer. Good timing. There's nothing that's happening on the Biden front that would indicate that there's need for a pullback. The bonds and inflation, there's that argument, is there going to be inflation or not? Let's let that argument sort itself out. We want to just look at the McClellan oscillator, and we want to look at the 50 and then the 200 moving average on the S&P 500.